You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Hilliard MacBeth, CEO of the MacBeth Group in Edmonton and author of the book, When the Bubble Burst, Surviving the Canadian Real Estate Crash. Welcome to the show, Hilliard.
Nice to be on the show again.
You said in tough times when markets are going down, it's hard to raise money. Yet the National Bank decided to do a share issue. Could you maybe talk about that for us?
Yes, it's quite unusual. So the last, just to take a small step back, the last 12 months have been particularly difficult for the Canadian banks. On average, they're down about 10%. And normally banks, when they generate excess capital in their operations, they pay dividends, very generous dividends, as people know, but they keep a little bit of money back, and that way they build their capital up as time goes by, and they don't need to ever raise capital by issuing shares, common equity shares. But yesterday, the National Bank took that very, very unusual move, and they have apparently some losses on a subsidiary that they invested in Germany, and their capital ratios, as monitored by the regulators, have dipped to a level that perhaps is dangerously close to the minimum level. But it's very unusual.
Would the trouble in Germany be connected at all to Volkswagen or the immigration crisis in Europe?
No, it's funny, that this is one of those things where you talk about black swans. It's this investment called Maple Leaf Financial. It sounds Canadian, but it's German, and I don't know. It sounds like they put more than $100 million in there, and the latest thing is that the investment may be worthless. So, in order to make up for that loss, they had to raise $300 million. I think that's the sequence. We don't know for sure because they don't really want to. They want to portray it as something they're just doing as a prudent move to get ready for whatever storm might come. But it is extremely unusual. I don't think they would voluntarily just leap to the markets, and when the markets are as bad as they were and have been for a couple months. It's a terrible time to be going to the market asking people to invest in your shares. So there must have been some pretty strong reason why they wanted to do that at this time.
How much were they able to raise?
$300 million was the target, and it was what's called a bought deal. So the underwriters are on the risk. National Bank was one of the lead underwriters themselves. So it's kind of like a incestuous thing, but I'm sure they were able to raise it. I mean, it's the price is pretty reasonable. But so as part of that, I was thinking about this morning, and I happened to run across a report from an analyst out of the U.S., and he was talking about one of the big banks, TD, and much bigger than National. And he said, I'm paraphrasing, even if the housing bubble bursts, TD's capital base should be fine. And I thought, wow, that's amazing. That's the first time I've heard that wording, when the bubble bursts, other than the title of my book, used by a research analyst out of the U.S. So there seems to be a shift happening now that Americans are becoming aware of the possibility that the housing market in Canada is in a bubble, and we may be going through a correction here. And the article said that that particular Canadian bank, TD, wouldn't be affected. But I disagree. I think all of the banks will be affected.
Now, you said Canadian banks are in a better position than most banks in the U.S. and Europe.
Well, what's been so amazing about the Canadian banks is how people first of all, people love them and they hate them, right? So when you go to deal at the branch, everybody hates the bank. But when you look at your shares in your investment account, everybody loves the banks because they've done much, much better than the U.S. and the European banks. So Canadian banks are trading at roughly 3 times book value on average. There's a couple of exceptions, and I'll mention one later. And the U.S. banks are trading between 1.5 to 1.9 times book value, and the European banks are trading at 1 times book value or even lower. So book value is a better measure of valuations for banks because earnings with banks can be volatile because of sometimes they go through horrendous losses if there's a housing correction or something like that. So it's a more stable way of valuing. So my question was, are the Canadian banks really that special that they deserve to be trading at 50% or 100% higher than banks elsewhere? And the reason that people loved them so much as an investment was they didn't have any really big problems in 08, 09, unlike the European banks and the U.S. banks who went through a horrendous sell-off and Some of them basically had to be rescued by the government and all kinds of problems, as everybody knows. So the Canadian banks are in a better position, but the problem is that they've attracted an extremely expensive valuation on the stock market compared to elsewhere. So even a correction in the housing market would be difficult for the Canadian banks. And what concerns me is a lot of Canadian investors have significant portions of their portfolios, so their RSPs, their TFSAs, their pension plans invested in the Canadian banks.
Are they coasting on reputation right now?
Exactly, and that's what, the story about the modern market theory that everybody has full information about everything in the market, and there's the first one was a random walk down Wall Street, and the guy argued that you can't make any money in the stock market because everybody knows everything. Well, to me, that's totally false, because people get these perceptions, and they're sticky. The perception, which was deserved perhaps 2 or 3 years ago, is no longer deserved. There's problems with the housing bubble, and maybe with the oil and gas downturn, there's going to be some losses for the banks there. But the perception from how well the banks did, say, 5 or 6 years ago, persists and continues, and people stick to that. And there's really no logic to it. It's just a function of human nature that people get a positive feeling about a certain group of stocks or a sector in the stock market, and until something really bad happens, they don't change that perception. I'm not saying that the $300 million issue by National Bank of Canada is the canary in the coal mine, but it is odd that they would go to the market and raise $300 million at this time in such a difficult stock market. And so they have to be in a position where they need to raise that money, or they wouldn't do it.
We'll have more with Hilliard MacBeth right after the break.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking with Hilliard MacBeth. Hilliard, you said a symptom of what's happening with the Alberta real estate market is happening with a person you know who manages an apartment in what is normally a very busy part of the city.
Yes, my friend who owns a large apartment building, along with a group of people. He doesn't own it all himself, but he's got investors with him, and they've done extremely well over the last 10 or 15 years, renting out rooms. And a lot of the rooms are rented out to people that have moved here for work. And he's lucky to be situated close to where a lot of the people work on these projects. So there's a staging area near Edmonton where they manufacture a lot of these big vessels that go up to Fort McMurray and become part of these huge mining complexes and processing mills and stuff. And but there's been massive layoffs in the last 12 months in that area. So he was telling me on Monday that he signed 15 checks in the last few days as refund of damage deposits. And of course, they have to tell him where they're going when he's going to issue the check, because they're gone. And he said the addresses are all Nova Scotia, Newfoundland, New Brunswick, Ontario. So there's a huge reverse migration, you might call it, going back to Eastern Canada from people that have left. And they obviously, having been laid off, they're not going to stick around in Alberta. Maybe they don't think they can find another job, or maybe they prefer to be at home closer to their family, find a job there. But I asked my friend, I said, well, are you going to be able to replace it? It's a lot of units. I don't know how big the building is, maybe 200 units or something. He said it's going to be tough to replace those people. There aren't a lot of people moving to Alberta anymore. It's amazing how quick things change.
Well, a person I interview in Toronto on a regular basis says she has seen just a huge flood of Alberta license plates in that city.
It wouldn't surprise me at all, and now they should change their license plates over, because I don't know about Ontario, but some other provinces like BC and Saskatchewan have government insurance. So it's funny, we used to always see the Saskatchewan license plates in Alberta, and
well, you have 3 months.
Why do they still have their Saskatchewan license plates? Why don't they switch it over? Well, there's no government insurance in Alberta, so if you switch over your license plate, then they're keeping their license plates in Alberta because they're taking advantage of the insurance provided by Saskatchewan. But I don't know how it works in Ontario. But and maybe they're just going home for a visit and they're planning to come back. But I don't think so. I don't think we're going to see those people moving back anytime soon.
Well, you have 3 months after you move to change your license plate usually.
Yeah. I think this will be at least a couple of years probably move, if not longer. If you're going to be out of work, you might as well be out of work close to your family and loved ones. Although it did occur to me that and myself having worked for more than 45 years, I guess, I really wouldn't want to be going home and knocking on the door and saying, "I'm back, and by the way, I don't have a paycheck." This wouldn't be the most positive homecoming situation that you could imagine. But
well, I've always said I could leave Vancouver and go back to the farm in Peace River.
I don't know if they'd want you back there, Jim. I'm not sure. Everything's mechanized now, so like, what would you do? I guess there's no hand milking of the cows anymore.
Yeah, darn, huh? Try milking the moose. We told American tourists that we used to go out and capture moose and milk them, and they believe you. But those wily Canucks, they do things differently. Yeah. Hilliard, thank you very much for chatting with us.
Thank you. It's a beautiful sunny day here in Edmonton, but apparently the snow is coming tomorrow, so I'm going to get outside and enjoy it.
It's rain in Vancouver today. It'll be snow in Edmonton tomorrow. That's how it works.
Exactly. Thanks a lot, Jim.
Okay, thank you. We'll talk to you in 2 weeks. My guest has been Hilliard MacBeth, CEO of the MacBeth Group in Edmonton and author of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. You're listening to HowStreet.com radio. Find us on Twitter at Talk Digital Net. Our YouTube channel is Talk Digital Network. You can forward comments or questions for the show to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.